Hi, friends. How's it going? My name is Mike. This is Health and Wealth. Thank you for joining today and hitting that subscribe button. I'm looking to get to 10,000 of you before Christmas. If you can help me make that happen, let me know in the comments below you subscribe today so I can thank you personally. Today, we're talking about CONY, Coinbase. We're talking about, the good, the bad, and the ugly. Yesterday, some ugly. Today, some good. And then on Monday, the beautiful, right? Coinbase joins the S&P 500. How is that going to help us with our ETF, which is CONY, the ones that we're invested in? For me, I've been invested in CONY. I'm going to say for like 5 months now, 6 months. And so my average price on CONY is $14.77. I have it set to drip, which means that every time we get paid a distribution, it automatically reinvests in the Coney. I'm keeping it in there for 5 years, so under 5 years now, which is exciting to see how that is going to work for me. Is it going to be, just kind of flat the entire time, or am I going to be able to grow that money in that account to hundreds of thousands of dollars? We're going to find out one way or the other coming up here, but yeah, I'm excited about the future. So, yesterday was the official announcement of Coinbase joining the S&P 500. It's going to take place on Monday, this upcoming week here. So another 4 business days from now. Now, because of that announcement, CoinStock took off. Coinbase's stock took off yesterday. And that kind of was really bad for Coney holders for one reason or the other. I'm going to go over both. I've got 2 Excel sheets that I've downloaded. One I downloaded yesterday, thank goodness, and then the other one I just downloaded right now. Color coded both of them so they're easy to look at for you. And I think it's really important that you temper your expectations because they had to close some options, right? They had to close some of their weeklies because of the skyrocketing price in Coinbase. So let's go ahead and take a look at the stock price right now. Price is trading in at $759. If you look at it though, yesterday, massive climb here from 207 all the way up to bu- 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 bum. Where's Monday ending? Well, it went up like $50 yesterday. Unbelievable climb, 23% climb here. Massive. But I mean, since yesterday to today, we're looking at a 24% climb in share price. Now, that's really good if we had our weekly calls far away because we would have great upside potential in our share price. But generally, at Yieldmax, they don't go too far away from the underlying price because they want to yield max. And how do they do that? They create these things called synthetic options. Synthetic options, they buy them at the price, or they create them at the price of the underlying at the time. So that's that. But then they do weeklies, and the weeklies they usually go, 2, 5, 10% out. It's very rare that you see 10% out from what the current price is, and then they collect the premium for that. Now, when we have a 25% rise in one day here, you can imagine that that would blow through those weeklies. What has to happen to those weeklies? Well, they could let those ride to the end of the week and anticipate that the price of Coinbase will come down at the end of the week, but they do have to close them. They could technically and physically roll them, but they usually don't do that either. So they would have to close them, and to close them, you have to pay out money to do that, right? So you collect money to create the call and the premium, but then if the price is over your what you've anticipated to be, you got to close it, and that costs money. Okay, so I've got a couple Excel sheets open here. I've got yesterday's and today's. I'm gonna go open both of them up for us right now. Yesterday's is the one that's the main one on the screen right here. The reason I have it kind of underneath the top one here is because I want to go over a couple little things with us and the red stuff here too. So the first one is that yesterday we had a synthetic for $200. Okay. Now at that time we had 50,450 positions in it, which is huge, right? So share price skyrockets. That's really good for that synthetic option. Now that option doesn't close till June 20th, so still a month and 6 days away from today, which is a long time, right? A little bit of time decay needs to happen in that for it to maximize its dollars and its money in our pockets. But really good whenever we see the share price taking off. It really helps the synthetic option. Now, above up here, it's a little more difficult to see. I haven't zoomed in quite as much to this one, but you can see we still have June 20th, a $200 synthetic sitting right here. But instead of 50,450 shares, we have 30,370 shares. The reason for that is that Yieldmax had to close part of their synthetic to pay for the red stuff that you can see on the screen here. So I'm going to come back to that top Excel sheet in just a bit. I want to go over this one. This is yesterday's Excel sheet. And I think it's important that we understand that, man, we think, wow, skyrocketing price, we're going to get paid, right? We're going to get paid is what everybody thinks, but we got to pay to make that happen. So this is yesterday's sheet. Like I said, the red is not good. And so Yieldmax had to pay for this. How did they pay for it? I'm going to let you put it together. I'll tell you at the end here. So yesterday they had all of these calls in red, weekly calls ranging from $210, and you can see the amount of shares and how much money they made from that. That's the minus signs here. And so 210, 212, and $215. Anything with a minus is a weekly call. Anything without the minus is their credit call spreads. Now, what they had to do was they made money right here. This is the money they made. And I'm actually going to move my face out of your way here so you can see it. I've written it down. So they made $16,226,880 to create those weekly calls. That's the premium they took in. To do the credit call spreads, they had to pay out $1,370,752, right? So let's just call it they made $15 million. Well, to close these options, because the price of Coinbase blew through these, they had to pay money. How did they pay for it? Well, they closed some of the synthetic option up here, right? So they closed roughly, was it 20,000 shares-ish of the synthetic, and that paid to close these options down here. So that's all of the bad news for today. Yeah, that's all of the bad news for today. I think it's important to know, though, like, we had to pay for that. We, as in the company, had to pay to close those. Okay, so I'm going to get rid of this sheet. We're going to go to today's spreadsheet, and you can see it looks a little more festive and green, doesn't it? So up top, what they did is they now have 30,370 still sitting there from the synthetic. And I just want to recover our price of Coinbase is 259. So if the price is of the price of the underlying stock is over top of their synthetic, then you've made money. That's really good, right? So that's a massive synthetic right now. I actually watched Retire on Dividend just before this video to kind of get the number. He recorded that by closing those 20,000 shares, they brought in $90 million, but they still had to pay out a ton of money to get rid of those red ones. Okay, so we brought in a ton of money. We put out a little bit of money there too. Okay, just to put that in perspective. Now, next thing that we're looking at is they've opened a new synthetic here, same date, June 20th, but for $250. You can see 16,080 shares. And they got a very, very nice premium for that too. So 250 was that. And right now the price is at 259. So what they're doing is they're anticipating that the price of Coinbase will be above 250 by June 20th. That's the hopes and the dreams. Now, they also opened up 4 weekly calls here for the remainder of this week. Now, I don't know who's in charge of the Excel sheet over here, but they put in May 25. That's not May 25th, by the way. That's May of 2025. I'm gathering these are closing this week. But who knows? Maybe they close next week. Maybe they'll improve that. I don't know. But yeah, so this is the amount of shares that they bought. They opened up 4 weeklies, and then they also opened up 2 credit call spreads there. And over on the under H here, this is how much money they brought in. I've written it down below. They've brought in $30,213,222.50 in premiums. Really good. And then they had to pay out the credit call spreads because they don't trust They don't trust that Coinbase is going to be a nice person and just sit there. They think Coinbase might go up even further over the next 3 days here. Thursday, Friday, Monday. Well, Thursday, Friday, let's call it 2 days. So they paid out $15 million to create these two credit call spreads, which are, I'm actually going to change the color of these. Let's change them up to, I don't know, orange or something like that, just so you can see the difference there, okay? Yeah, we'll go back here. So yeah, in order to trigger those, then we want the price to go above this, right? And then that helps us with our uncapped ability to make money. So I think it's really cool to see these numbers. I don't know why I find this so interesting, right? So bringing in 30, paying out 15. So let's call it we brought in $15 million. On top of the synthetic, we probably brought in quite a bit there as well. But then we paid out a bunch to close the calls that got blown through, right? So it's going to be an interesting payout. I think it's 14 days from now is the payout. The 28th, I think, is the number. But yeah, it should be a really interesting payout for that distribution. I don't have any guesses on that number or anything like that, just because it's kind of chaos at the moment with these distributions, or with the synthetic and with the weekly calls getting blown through. But I hope I did a pretty good job of explaining that to you guys. If I did, let me know in the comments. For me, I think that's pretty interesting stuff. But I've got a few other things here. Actually, that's from my video yesterday. If you didn't get a chance to see it, I'll link it above right now, but also just scroll through my videos to see it. It's another Coinbase video. No, I don't want to save that. Get out of here. I have actually a couple more things for you here. Coinbase itself is a massive fund currently trading at $1.15 billion in AUM. That's your money in their fund. Massive, massive fund. We'll see if it keeps going up as its popularity gains, but that's that. One thing that's interesting is Coinbase's price skyrocketed 26% in the last 5 days. Over here at Yieldmax, it went up 13% in that same time period. I'm going to move my face out of your way here. There we go. 13% in that same period. CONY has been slipping very, very quickly downwards here over the last 6 months, and I mean over the last year even more. But hopefully something like this can increase its share price for us a little bit. Like I said, I think my average is $14.77. So yeah, of course I want my share price to stabilize, and of course I want good distributions there as well, just for personal reasons, and I'm gathering you're probably the same. I've got 2 videos for you to watch. They're both pretty quick. The first one is CNBC yesterday, and then the second one is actually an interview with the CEO, which I think you're going to find to be pretty interesting. We're going to discuss them both whenever we come back. All right, here we go. Let me adjust the volume a little bit to make it a little better for you.
The spotlight, and so is Coinbase, because it is about to join the S&P.
That's right, Scott. Ending the day up a whopping 25% here on that news that it's joining the S&P 500 next Monday. It'll be replacing Discover Financial, and Coinbase is pacing for its best day now since November 6th, and it has erased its year-to-date losses with that rally. Analysts today cheering the stock's big upside potential, saying shares will benefit from passive inflows into funds tracking the index. Oppenheimer's Owen Lau has been calling this moment as a key catalyst to watch for months now, said today that the lack of institutional ownership of Coinbase thus far has been part of the bear thesis for that name, but has now become more of a strong tailwind, and he raised his price target on the shares. Just a few months ago, Scott, this company was in an intense litigation with the SEC. That, of course, was dropped by the agency when the Trump administration moved in, just 4 years after it went public through a direct listing. So a huge feat for the company and the industry at large. Scott?
But first, we have to really start with your big moment, which is that S&P 500 inclusion. You have been focusing here on expanding your world in financial services. Discover was taken out. You're added in. What does it say about the moment?
Yeah, well, it's a huge moment for crypto to now be in the S&P 500 with Coinbase entering, and it means that crypto is here to stay. people are going to have crypto exposure in all their 401ks, and it points a little bit to, I think, where the future of financial services is going. Crypto is a technology to update the financial system. We actually launched our own index, Coin 50, which is the top 50 crypto assets, market cap weighted. And someday we hope people might actually, feel the same way about getting in the S&P 500 as they do of getting in the Coin 50 index. So it's a great moment.
We were talking a little earlier about eToro's IPO. You see other entrants like that come into public markets. Wondering what it means for you, because eToro is not going to be the only one in terms of entering that crypto versus stocks world. Do you think Coinbase will ever get into traditional way equity trading, or at least tokenized equity trading in a much larger way?
Yeah, well, we think that all asset classes are being tokenized. Crypto, again, it's this technology to update the financial system. That means every company, every fintech, every bank, every payment company, even non-financial service companies are going to be integrating crypto payments. It's kind of like when the internet came out, and first you had .com startups, and then every Fortune 500 company uses the internet. So we think it's going to be very similar. And actually, this is a good thing for Coinbase, because many of these companies, when they come into crypto, they're going to buy our products and services. We actually power crypto custody, trading, payments, especially with stablecoins, which is a big new emerging activity for lots of companies already. And so we're excited about that happening. Now, you specifically asked about tokenized equities. We're excited about those, and we want to lean into the crypto native solutions, not trade traditional securities in the way that many other companies do. We think there's unique advantages to having this come on chain, and so we're excited to explore that. We've met with, for instance, the SEC task force on this recently, and there seems to be a general willingness to have these kind of asset classes come on chain now.
Let's stay posted on that front. Of course, there's a big question on how soon that could happen. Now, Brian, stablecoins, because part of the discussion that is looming large in Washington is, of course, that stablecoin bill. Now, I recall a trip I made down to Coinbase's New York offices. I spoke with one of your deputies, Jesse Pollock, and he showed me the way that people are transacting on Coinbase via stablecoin, often at no fee. I'm really wondering, from your perspective, to the extent that when you see a bill passed, how much that could set off stablecoin payments, peer-to-peer payments, in a way that's cheaper than the financial industry does it today.
Yeah, well, you're right. Stablecoin adoption, like USDC, it has grown enormously, and a lot of it's happening on Base, which is a layer 2 solution that Coinbase helped create. So it's a very exciting moment where we're seeing stablecoin adoption. Now, we also need to make sure that this technology gets built here in the US, and that's what this stablecoin bill is really about. It's a historic moment. There's a lot of interest from senators on both sides of the aisle that I've met with today to get this legislation done, and that's what we're here to try and help do. Now, the details matter, and there's bits of language that are being negotiated right up into the last minute, but we're here to try to underscore the urgency of this, and the 52 million Americans who've used crypto really want to see this legislation get passed so that this industry can get built here onshore in America.
Well, you say words matter. What are the words now that you would want to see changed as it hits the final finish line?
Yeah, I mean, there's a couple examples for you. One is that DeFi is something that is separate from financial services. We don't think it should be included in the AML provisions. AML provisions make a lot of sense applied to the centralized intermediaries like exchanges and custodians, things that Coinbase's core business. But DeFi should be excluded from that, and recent language updates we've seen seem to indicate that that's the path they're going on. One other area for you to think about is there are some prohibitions on paying interest and yield in some of the drafts or some of the language that we were made aware of. We think that this is, banks should have to compete on a level playing field with crypto. We think that paying interest and yield to customers is good. It's a consumer benefit. We actually think that American consumers should be able to benefit from that. And any company, whether you're a bank or crypto company, should be able to compete on that front. Now, there's a lot of debate back and forth about that, but these are examples of the kinds of issues that are coming down to the line. We want to make sure that perfect is not the enemy of good enough, and getting this legislation passed is the highest priority.
Right on. Very good. So, I mean, for me, I really care about the share price. I would love to see this get back to 20 somehow. Can this happen? Can we make that happen, Yieldmax? How do we get that share price back up to 20? Also, I mean, take a look at that share price right there. What are your predictions on Monday when this becomes an S&P 500? Is this going to be buy the rumor, sell the news? Because that's what I think is going to happen. I guess it really depends on what the market's doing. Also, the price of Bitcoin, that's the big one there. I am a CONY user, a Coinbase user. It's been super simple to use. It's my first attempt in the crypto world, and I've been really happy with it for sure. If you put $100 in, you're paying $2.99. If you're paying, $500, you're paying, I think, $7.99, and that's how they're making some money on those fees. But yeah, I think it's a really easy to use platform, and I see why it's valued at the way it is. And I mean, some people are thinking it's going to be up to 290. That's their price prediction for it. I'm sure there's a lot of other price predictions out there for it as well. But yeah, that's my video on Coney Coinbase. Good luck to all of us investors in Coney. Payments out in 2 weeks from today. Should be a really interesting time. If you're new here, I would love to have you as a subscriber. I have 5,400 people. I'm trying to get to 10,000. Hit the subscribe button for more content like this. Let me know in the comments below. Also, thank you to the 12 members so far. Fist bumps to you. I absolutely love that you guys are supporting me financially. I really appreciate that. If you want to become part of the 12, hit the join button down below too. But I'm going to leave it at that. If you, actually, I shouldn't say it like that, should I? If you hadn't had a chance, I actually just released a Group A video. I'm going to link that right here for you to watch. I hope that you guys have a wonderful night. My name is Mike. This is Health and Wealth. Bye for now.